Hello guys, good evening. I'm going to do the market close update. I know I just published a video in YouTube, the one about the market cycle top and bear market bottom potential targets. Make sure you don't miss that video. I made that video in the morning and it went out tonight. But I don't want you to miss what's going on in the price action, particularly if you are on a swing trade. This video should be quite helpful. So I'm going to start with the 4-hour time frame and let's see where we are. After the breakout in here, then we have the Trump pump on the other side going to 73, and then we came back precisely to test this support at 37. Okay, and this new impulsive move that starts from a price of 81,800 goes all the way to 90,500. That is our current resistance, and you can tell that that has had a much smaller intensity in terms of the RSI. For example, this one has long streaks of RSI, then a little bit of sideways in here, and then it creeps up towards the neck of the head and shoulder in bears where we had the breakout from 86, and then straight back again to the top, another impulsive move of the RSI. Whereas in this area we have had, we could say, a smaller impulsive move and then a rolling over in this area. That rolling over is a consequence that we are now respecting the 91 resistance. When we had the first shoot to the top with the Trump pump, 91 was cut in half like nothing. Okay, we went straight for 95k. 94,800 was my target. And I say that we needed to stop at 91, but we never stopped. Well, guess what? This time we're kind of respecting that. And at the moment, the bulls are stepping up to try to break that resistance. But how are we looking? And what's the likelihood that we break that? I think it's possible, but there are some signs that are showing that there might be some struggle there. Okay, it's not just 100% guarantee that tonight we break the 91k. So there are some stones in the way, and that could mean that there is maybe a 60% chances that we don't cross it. And let's look at the price action, because there are some details that I don't want you to miss in this area. So let's focus just on this area. What have we done? Well, we took the fair value gap in here at 87.7. We have a retracement. We tried 3 times to break beyond this. As I'm recording, we're trying for a 4th time, and we haven't taken the fair value gap of 85,787. Okay, so that is currently the danger of failing to do that and then coming back in here. So let's leave that on the table. And if we manage to cross this, I want you to know that the next level to look at is the exact level where we went with the Trump pump, 94,800, more or less. That is currently an order block. It's an order block is a candle that initiated an impulsive move in any direction. In this case, it's to the downside, but it can be to the upside as well. So weakness, where is the weakness in here? On the other side, there's just weakness in here because of this rolling over, but that doesn't necessarily mean it's done. We also have some rolling over on the 1st of March, but we still carry on, right? And we had rolling over in here because we were facing the neckline of the breakout, and in here as well. We are struggling in there, we can break out, but it's rolling over, so we pay attention. Let's go into the daily, and then I'm gonna show you the data on the order book. That is the one that matters at the moment, showing me some weakness. Obviously that changes by the minute. When I started preparing for the video, there was weakness. Maybe when I'm recording now, it has changed. If that's the case, I'm gonna change my mind and let you know. So on the daily, we are below resistance. So if we go into 91, I presume, so this is 50. Let me change that. let me change that to 50 so we get a up-to-date resistance in the price action. So let's see, where is 50? 50 is at the moment at 92,500. That is our daily resistance. That is what we need to break to be able to get us, back into a breakout bullish on the daily. Not back. Actually, to break out on the daily, we need to cross 92,500. Beyond that is resistance. So we can shoot beyond the 91 and still face resistance there and not break out. Okay? Daily close beyond 9500 put us back in the previous range, just like we did with the Trump pump. So that is positive. But what we actually need is 92,500 to break out on the daily, which we haven't done. If you look from the distance to this, we're still facing resistance on the daily. If we do the breakout from here, we are doing a breakout from 51. Do we have some upside? Well, yeah, we can get all the way to another top at 83. That's theoretically speaking, right? Yeah, okay. That's the daily. I needed to say something else about the daily. Yeah, sure. This is important. We have now 1 week to the downside, bought up, back into support at 84. Perfect on the daily. On the daily, the next low put a higher low at 81,400. We haven't taken this. Liquidity from CME and liquidation levels is huge below 77. But we cannot take for granted that we are going there. I have an order there. If I get lucky, I fill it. If not, I'm going to have to look for another entry. And this is so far not broken the structure because we have a low, a high, a lower low, a higher low, and now we are looking for a higher high. And the 92,500, hopefully if we go slightly beyond, if we get to 96, then we get that higher high. But the 92.5 is a breakout on the daily. Got it? I hope you're retaining all of that because it's a lot of information, I know. Now let's go into the data and let's see how realistic is that we can do that. From the point of view of liquidation levels, let's refresh this. Let's make sure that I'm not giving you crappy data. And we are at 262. So that's very shallow for a delta in the red. That means that the shorts are in risk. So they can, if the price goes slightly up, there is some petrol for the car to carry on going a few more miles. How far up? I don't know. But remember, when we were 1.3 million, yeah, we moved from 78 to 94.5. And this is 262. It doesn't need to be proportional, perfect by the dollar, but it gives you a range. So this is not that much. That's what I'm trying to say as an alpha number one. Then we look at this chart and longs have stepped back down. So longs are at the moment at 56. When they were 55, that's when we put the top of the Trump pump, alpha number two. Okay, we are in extreme fear. That is great, beautiful. That calls for continuation to upside. Too much fear, yeah, it can carry on. That's another alpha, that's bullish. Then the amount of leverage of the shorts continues to be very high in this range. That is bullish. Another data point towards being bullish. And on this chart, this is not that bullish, okay? People are shorting all this area, and beyond this price, there's tons of limit orders to sell. 0.14 is not too much, okay? But is a decent amount. So that is slightly worrying me, to be honest. The 0.14 is not the end of the world. It's not impossible that we go beyond that, but I can tell that people really want to short this level, and it's going to be a tough battle. So all I'm trying to say, don't take for granted that this move beyond 91 is doable as of now. Let me go back to the charts as well. And let me show you that we are currently in general markets having a little bit of positive move. That started yesterday. I think I mentioned in one of the videos that the Nasdaq entered in a 4-hour uptrend, and it has continued with that. So we are still in the territory, for example, in the S&P, of a breakdown on the RSI. And today, at some point during the day, the S&P was below the neckline at 5.7K. I'm sure I'm not crazy. I think I saw it today, not yesterday, but if I'm wrong, forgive me. It's quite late, and my brain tends to fail at these hours. But I remember seeing it below the neckline, and being below the neckline, of course, is bringing a lot of fear. It's bullish if it closes back above and it becomes a liquidity hand. Ideally, we go back above this trend line of 5.9. But if we close the week at 5.7 or anywhere below the neckline, that is bearish for S&P. And the Nasdaq has also kind of reverted some of the damage done, but is still below the neckline. The neckline is at 20.8, and at the moment we are at 20.6, and target is 19 if we close below that for Nasdaq. And all this battle is also reflected in the volatility index. You can see that we are still above the channel, but we have undone a lot of the damage. So if the people continue to talk that the tariffs are out of the way, that maybe there's going to be a compromise and all of that, don't worry, we are all friends here, blah, blah, blah. That direction, that narrative can bring back down the VIX, reduce the volatility, reduce the fear, and then we just say that this was just one of these. And yeah, S&P can carry on going higher, and it doesn't break by the end of the week all those levels. And that definitely helps as we go into the crypto summit to have an actual rally. But we are still with the Nasdaq below that neckline, and that is fear enough now to contain a little bit that rally. That's my perception. I hope you appreciate the update additional tonight related just to the price action as of now. The other video I recorded this morning about Bitcoin is about long term for bear market or for market top this cycle. Make sure you don't miss that one. I think it's even more important than this one. This is just a small move. And well, I'll see you tomorrow. Hit the like, subscribe, write down a comment down below, and I'll see you for the update in the morning. Don't miss it. Bye bye.